The orthopedics industry has been around for a century, developing devices and implants that help people walk, run, and live healthier lives. But despite being one of medtech's oldest sectors, it's also one of the fastest adopters of new technologies. Space-age materials, surgical robotic systems, sensors that can send data directly to hospitals and physicians. In this series, we'll talk with industry leaders about how these new technologies will change the face of medtech. Welcome to the Ortho Innovation Talks podcast. Hi everyone, this is Tom Salemi of DeviceTalks. Welcome to the very first episode of the Ortho Innovation Talks podcast. As you know, our past podcasts have focused either in the industry like DeviceTalks Weekly or on specific companies. We're taking a different direction with this podcast. We're going to focus on a specialty within the medical device industry, one of the largest, one of the most innovative, the orthopedics industry. So we're going to focus a series of episodes on a particular company in the space. And that'll be really the hook that we hang these episodes on. And I'm so happy to have as our first partner in the Ortho Innovation Talks podcast, Zimmer Biomet. We've been talking with Zimmer Biomet for a long time about this project. We're really excited to be putting it together finally. And it's affording us the opportunity to really dive deep on how Zimmer Biomet is impacting the orthopedics industry and helping patients. But in addition, we're also going to look at other companies that are assisting the orthopedics industry. In this case, we're going to talk to AQMD, which has built a really impressive product line of services and systems that can help folks building markets in the orthopedics industry. So I'll talk a bit with Mike Montevoukas. He's the CEO of AQMD. Then I'm really psyched to bring you the interview that I did with Rachel Ellingson. She's now Senior Vice President and Chief Strategy Officer at Zimmer Biomet. And we'll talk about Zimmer Biomet's direction, where it's going, about some of the big moves it's made over the past couple of years, including the spinout of ZimV, and about how Rachel and the leadership at Zimmer Biomet really views the future of orthopedics. So really excited to bring the conversation with Rachel Ellingson. She'll be the primary focus of this episode, but we're also going to intersperse the conversation I had, again, with Mike Montevoukas, the CEO of AQMD. We'll talk with Mike first, then we'll talk with Rachel, then we'll bring Mike back and finish up with Rachel. And we'll be bringing you new conversations with different leaders at Zimmer Biomet and different orthopedics leaders from smaller companies or supportive companies in the orthopedics industry. We have a great line of sponsors that we'll be rolling out for the Ortho Innovations Talks podcast. So really grateful to have you here. And I know you'll enjoy this episode and these conversations. As I said, we're going to open up this episode with a conversation with Mike Montevoukas, the CEO of AQMD. Mike, welcome to the podcast.
Thank you, Tom. It's great to be on.
We've had the blessing. You've blessed our airways before with AQMD's message, but there may be one or two people out there who haven't heard your story yet. So could you give us a quick primer on what AQMD is up to? What do you folks do for medtech companies?
Absolutely. And Tom, a lot has changed since we last spoke.
Oh, boy.
AQMD is the leading commercial platform for the medtech industry. We work with about 150 different medical device companies, including now 5 of the top 10 by revenue. And so we started our journey building a platform that serves personalized opportunities to help field sales teams hit their number and grow. And our targeting module was built with a suite of differentiated features and innovations, like being able to track product usage so that companies can unlock cross-sell and white space opportunities, or our peer network algorithm that can personalize that answer to the question every sales rep gets, which is, well, who else uses this product? Mm-hmm. So we can personalize that for each surgeon. And Tom, we talked about this one a bit, our new AI-enabled audio briefs. So helping sales reps learn about their territory during windshield time, almost like a personalized podcast channel for every rep.
You're killing me, Mike. I love the idea. When we first met AQMD, I thought those folks could use the podcast. So I'm glad I wasn't wrong, but I wish I was. I wish I leapt on the opportunity, because it sounds like a great fit for what AQMD is up to. What's the interface like for sales reps when they're using AQMD? What kind of information are they getting on their hopefully future clients?
Yeah, absolutely. So we've tried to meet the sales reps where they work. So mobile app, they have the richness of our data platform behind the scenes. So pulling from 330 million distinct patient journeys in the US.
Hmm.
The reps can access the platform through mobile, but we also have an audio-based experience so that when they're on the road, they can learn about their territory, they can learn about their accounts, they can, learn about individual surgeons that they're going to go call on.
That's excellent. And we're talking a lot about strategic growth within medtech, where we're fortunate to be focused on a lot of high growth companies in this industry. How does AQMD support strategic growth initiatives within? Well, let's start with larger companies, then we'll talk about how you work with smaller companies later.
Absolutely. So one of the things we learned about, we started with the rep, and the more we talked to folks at medical device companies, we realized that our data platform and workflow tools could help drive broader strategic initiatives across the medical device enterprise, whether supporting M&A or even organic product launches. So I'll give a few examples. From an M&A perspective, we can replace a lot of the static reports and data sheets that companies traditionally use to evaluate markets and quantify market size and operationalize post-acquisition. So one of our customers, Cordis, and Cordis X, their innovation accelerator, has adopted AQDMD to quantify the new markets that they pursue and assess the strategic fit with their current portfolio of products. And so what's interesting about that model compared to the status quo is we can integrate in each company's definition of their ideal customer profile and product usage from their existing portfolio of products to then overlay a new market that they want to expand to and see what the synergies might be by, going from product A to product B.
Wow. So AQDMD is not only becoming useful when a company has decided to go into a space, but you're a big part of the decision whether a space is worth going into in the first place?
Absolutely. Let's walk through this hypothetical example, Tom. So let's say you're the CEO of an orthopedic trauma company. Mm-hmm. And you're thinking about a product launch or maybe an acquisition into the rotator cuff repair market. Okay. So that's sort of the current state. You might do some research. You might find that the overall market for this new rotator cuff product is $500 million, just to make it up.
Okay.
But let's be honest, you don't have all the relationships with all those surgeons. You might be locked out of certain accounts. It's going to be difficult to convert all $500 million of that market over to your new product. And so based on what we can do with the QDMD is not only show you how big the market is, but we can say, hey, Tom, based on the surgeons who already use your trauma portfolio and the accounts who are already purchasing trauma, your trauma bag, well, we can identify $20 million of low-hanging fruit where you can cross-sell your rotator cuff product into your existing base of users and customers. And within a few clicks, you could operationalize that strategy out to your sales reps and start tracking and reporting on the outcomes in real time to make sure that, hey, our initiative is working, or maybe it's not, and we need to consider a new segment to expand to.
We'll hear more from Mike Montevoukas a little later in the podcast. If you want to find out more about AQDMD right now, go to AQDMD's website. It's Acuity, ACUITY, MD.com. All right, now let's begin the conversation that I had with Rachel Ellingson, Senior Vice President and Chief Strategy Officer at Zimmer Biomet. Well, Rachel Ellingson, welcome to the podcast.
Thanks so much for having me.
I'm excited to hear your story. You have an interesting background into medtech. Not your typical engineering route or wanted to be a doctor route, or maybe you did want to be a doctor. I don't know. We can find that out. But really want to understand your role as Chief Strategy Officer at Zimmer Biomet. And you've had a lot going on over the last year, and I'm sure you've got some plans coming up in the future that hopefully we can delve into a bit. But first, let's learn about you. How did you find your way into the medical device industry?
Great. So for me, I will go back probably all the way to college because it's usually an unusual route because people assume I have a big background in finance. And when I actually started out, I was a psychology major. I know.
That's a curveball. I didn't see that one coming. All right, you got me. Continue.
There you go. So, I didn't necessarily ever really want a career in psychology. I just found the coursework really interesting. So I love understanding human behavior, why people do what they do. I've just always found that interesting. But from a career perspective, I knew I didn't want to go further into psychology for my career. But to be honest, I really wasn't at all sure what I wanted to do.
Mm-hmm.
I graduated during a recession. Jobs were pretty scarce. So I was one of those people who was just, throwing out lots and lots of resumes, and got my first job actually in the compliance department of a brokerage firm.
Yikes.
So I know, interesting, great for lots of reasons. I love my compliance colleagues. For me, it was not exactly where I wanted to be, but I will tell you that the great thing about it was that when you're in compliance, you get to learn a lot about every area of the company. So I met a lot of people while I was at this brokerage firm, and some of the people I met were in what was called the investment banking division inside of the brokerage firm. And didn't know what that meant. I had no background in it, but I thought I would talk to people. They would explain to me what they were doing, and it sounded really interesting to me. And I don't know if people all know what investment bankers are here, but generally, they're financial strategic advisors who work with companies, helping them raise money by accessing the capital markets, and then they execute mergers, acquisitions, divestitures. So probably a longer story than we have time for. Eventually, I was able to convince the head of investment banking to give me a chance in the investment banking division as an analyst, for which I'm very grateful. But I digress for a minute. I originally went up to him, and he very politely and firmly was like, "You really don't have any of the background that we're interested in, but thank you so much for calling." To which I then said, I'm like, "Well, what do I need?" And he's like, "You need finance background." So I actually took my GMATs, enrolled in the MBA program at UConn. I was working out of Hartford at the time to get finance. I came back to him. I'm like, "Look, I'm going to have finance. Can I come to your firm or into your division?" And he was like, "Well, you need computer skills."
Wow.
So I went, I took local computer classes, learned spreadsheet skills, came back. And I think, after some relentless pursuits, he just sort of agreed to give me a chance. But that was how I got into investment
That's
banking.
great, though. That's great that you sought to fill the gaps that he put in front of you. What was the role you wanted? Was it a Wall Street analyst, or was it an analyst for the investment banking side of the house?
Well, yeah. So at the time, I really didn't know what I wanted. So it was the people I met that really convinced me it was an interesting area. I was a psychology major who was just trying to figure out where I wanted to be honest. I really didn't have I want to be a Wall Street person. In fact, I graduated probably not really even understanding what that was. But it worked out great. I mean, I stayed in investment banking for 15 years. That first company was a brokerage firm that no longer exists called Advest. It was acquired probably in the early 2000s. And then from there, I moved to Cowen. I was at Bank of America, ended my career as a managing director in their medtech group, and truly, truly loved that part of my career. I worked with CEOs and boards, lots of different healthcare companies, mostly in medtech. And you're working with these companies, at some of the most critical inflection points that a company can have, right? Acquisitions, IPOs, initial public offerings, other financing. So that psychology, human behavior part actually did come into play with a lot of my banking work. You're really working with leaders as they think through strategic options and make decisions around things that would change the trajectory of their future. So loved that.
So what was it that convinced you to move out of investment banking and into industry?
Yeah. So, and I will say it was pretty surprising when I did make the decision to leave investment banking, but I knew some people talk about that voice in your head. For me, it was that voice saying, "Hey, what would it be like to be on the inside, right? Be part of, you do a deal with a company and they're a client, but you're not inside, either part of the decision-making beforehand, where you're thinking about why you want to do the deal, and you're not necessarily part of the team, or you're definitely not part of the team to go build something on it afterwards." So I just knew that I wanted to leave investment banking and do something different. I left, and actually I didn't leave for a specific job. I just I left.
Wow.
I decided it was the right time to go, and I ended up reaching out to a couple of my medtech clients after I left. And much to my happy surprise, everyone I called would be like, "Hey, yeah, we'll hire you for project-based work," which was fantastic. So I was a bit of a consultant for a while. And I found even that I was a little bit more on the inside, and I really enjoyed it. Worked with some great companies like Vascular Solutions and AGA Medical, but you're still a little on the outside when you're a consultant, even if you're their consultant. So I ended up joining AGA Medical, which was a company I had helped take public. And they asked me to come on full time to lead investor relations and business development pretty soon after their IPO.
Wow.
So that's how I ended up in medtech.
So you joined AGA in 2009. According to your LinkedIn profile, you left Bank of America in 2008. This was not a great time to be leaving a job. What was it that convinced you, like, no, I'll be okay. I'll figure it out? Because taking that leap into nothing can be terrifying.
Yeah, it's funny that you asked. In some ways, it was a terrible time. In some ways, to leave investment banking, it was a great time. In
Good point.
fact, when I left in June, June of 2008, I had no idea that in September of 2008, the entire world was going to collapse from an investment banking perspective. When you think about all the investment banks during that time that struggled. So I had people who would call me and say, "How did you know?" I didn't, for the record, I did not. Just listened really and just realized it was a good time for a lot of reasons just for me to go. Again, great. I wanted to leave also when I still loved it. And I was concerned that if I stayed much longer, I wouldn't.
So you went into business development and investor relations at AGA Medical, and then would go on to vice president of corporate strategy at St. Jude Medical. Over those 2 years, were you not inside enough? Even investor relations, I imagine you're inside, but you're still not. Your hands aren't dirty. You're not like operating a business. You're not selling devices. It's still a little bit on the periphery.
Yeah, although, one of the things I do love about investor relations is I think you have to learn very quickly about the entire company, because you're the spokesperson to the street around explaining the story. So, but for me, I was there, I was probably about a year full time when we were acquired by St. Jude Medical, right? So that was my first time being acquired. And
how did it feel?
It's really different than being an advisor. But that's part of why I actually had wanted to leave, right? Banking, I wanted to get that experience and understanding and seeing and being a part of an employee base when you're acquired is a completely different experience than when you are advising on the transaction, obviously. And for me, when that all happened, it was a good opportunity to learn some new things, right? I was all of a sudden part of the internal diligence team on the sell side into St. Jude Medical. And then I stayed on with the integration process. And so you get to learn and you meet all the St. Jude Medical leaders. And they asked me to stay with the company after the acquisition closed. And, I was there actually 7 years. And as part of that, had so many great opportunities there to lead many different functions. So you mentioned corporate strategy, and that I think was my very first title there and my last title there. So my first title there, and I was doing special projects, but pretty quickly after getting there, they asked me to lead investor relations and corporate communications, which again, I remember saying to them, I'm a finance person by background. And they were like, we know that's great. We really want to try to just make sure we're talking to all of our stakeholders the same way. We want to make sure that our communications team understands the business side and that our investor relations team is communicating the way we need them to, so that they're all aligned. So I ended up taking that on. And then then I went into, they actually expanded my role then to corporate relations. That included government affairs, philanthropy. And then after that, I ended up expanding my role again into marketing communications. So that now you're really into the organization, understanding products, marketing. And then from there, formally expanded to strategy, business development, and integration. So through that 7-ish year time period, I had the opportunity to really expand my inside operational experience that you just would never see as an investment banker.
Looking back to your time as an investment banker, where you were charged with understanding a company and a business and advising them, and actually being in that business and looking under the hood and pulling out spark plugs and doing whatever else people do when they're under hoods. How did it compare? Do you look back at your investment banking side and say, geez, I didn't really understand as much as I thought I did? Or did you think your time back then was pretty solid?
I think they're really different experiences. So I think when you are in investment banking, what you really can offer that you can't always do or can't really do inside a company is the breadth of what you know. So you have much better knowledge about what's happening all over the market. When you're inside a company, you can get a little more myopic for good reasons, but you're really looking at everything at a much more granular level. So in my experience, I do think that having both has been a really great experience for me, because I can see from both sides. But there are times where I'll talk to an investment banker now and they'll point something out to me that probably my I look back and I say, oh, my old self will be so disappointed I missed that. But it's because you just have a very different, everyday experience and responsibilities.
That's true. Different perspectives.
Yeah.
Obviously come with different viewpoints. So let's talk about your role at Zimmer Biomet. You joined Zimmer Biomet April 2018. You're now Senior Vice President, Chief Strategy Officer. Was that the role that you came in 2018?
Yeah. So after I had left St. Jude Medical after it was acquired by Abbott, right? So that was the second time I was acquired. And I only say that because I tell people all the time I've been acquired twice. But another opportunity, to your point, where I didn't necessarily leave for a job. I left Abbott after the acquisition and kind of said, I want to take a little time off just to think about what I wanted to do next. Again, those are good opportunities, I think, to rethink what you want to do. And then I met Brian Hansen, and he had just become the CEO of Zimmer Biomet then. And this would have been early 2018. He talked to me about being part of a large global transformation. And one of the things that I loved about my prior experiences is that they were ever changing, ever evolving. And that is the type of environment I like to be in. And they did not have a strategy and business development separate function at Zimmer Biomet. So he said he wanted me to kind of come in and create that, which I accepted. So I've been here, Zimmer Biomet for about 5.5 years now. And it's been an incredible journey where we've made a lot of progress over the last 5 years. It's been a lot of fun.
How do you define the function of your role there? What do you do?
Yeah, great question, because I find that strategy means a lot of things to a lot of people. So in my role today, I've got responsibility for a couple of years. So I've got a couple of areas. I've got corporate strategy, business development, and integration. So if I break those down, corporate strategy starts with, I'll call it setting our corporate goals, right? We're working with the businesses, regions, and functions to make sure that their strategies connect to what our corporate goals and our enterprise goals are. So strategy is kind of the how we're going to achieve those goals. And we run this through an annual strategic planning process, set annual, operating mechanisms and dashboards so that you can track progress. People often forget that part of strategy is actually the deployment of that strategy so that you can execute that strategy. So you have to create it, but then you have to have mechanisms and dashboards and things that you can do to track your progress. Otherwise, it ends up being, a slide deck that sits on someone's shelf, which is definitely not the kind of strategy I would want to be a part of. So, and this team so corporate strategy also does market research and peer benchmarking and things like that. But so that's first function. Then we've got business development, which at Zimmer Biomet is the function that is embedded inside of the businesses to understand their strategies and then how those external investments, so acquisitions, strategic partnerships, can help them, accelerate their strategy, right? So that team is identifying potential targets, developing business cases so that we can prioritize across all the different targets or the opportunities. And then that same function will then execute transactions. But this one is from the inside. So you're running the diligence processes, you're negotiating with the other party, structuring transactions, getting approvals, and then actually closing a deal. So that's my business development and corporate development arm. And then I have the integration. So integration is for acquisitions. We actually have an integration management office that works with the businesses, of course, and business development teams. They build the integration plan, and then they oversee the actual process until the acquisition is fully transitioned into the business. So that's what falls under my direct purview.
Wow. Okay. That's certainly a lot. Now let's take a quick break from this conversation with Rachel Ellingson to bring back this episode's sponsor of the Ortho Innovation Talks podcast series, AQMD. Again, I am speaking with Mike Montevoukas. Well, how about on the startup side? I mean, you're talking about companies that, maybe they have a device that doesn't quite, it's innovative by nature. They're startups. They're coming up with new devices, new approaches. How are you able to work with companies that are bringing new products to market that may not fit a previous mold?
Yeah, it's a great question. Really strong use case around high growth companies looking to establish their commercial traction. And I think one of the big challenges, with an innovative medical technologies is distribution. You go talk to startups, they're all looking for distribution. Not only that, how do we make sure that our limited sales resources stay focused and efficient as they launch a product? And so, one example I point to is Embody. The commercial team in Embody adopted AQMD on the eve of the launch of their product Tapestry. And, so we were ingrained into their initial launch plans, from territory design and initial target lists as they rolled out their commercial team, back when they first launched. And AQMD helped their reps, some of which were brand new to the product, and in some cases, even the call point, ramp up to 8 weeks faster and achieve their quota in that first year of the commercial launch. And well, the rest is history for Embody.
Interesting. When's the earliest that you tend to get involved with a startup? Are they all calling you the night before they're going out to market, or does AQMD become involved much earlier in the process?
Yeah, I think there are two discrete junctures where startups and high growth med tech companies pursue AQMD. The first is when they're evaluating a new market. Now, this could be in preparation for an investor pitch, and they want to identify what's the market size, how is it segmented, what is achievable based on what we know about the market, so that they can go and pitch that to investors or strategics. That's one juncture point where, folks come to AQMD for that insight initially. The second is as they're starting to plan commercially of where do we want to place territories, how big are these territories, how many reps can we justify for phase 1, phase 2, phase 3 launch. That's another key use case to adopt AQMD, to help with that territory level planning. So those are kind of the two juncture points: market sizing and then commercial launch.
Well, final question. Let's talk about AQMD's high growth. I think I started talking to you, I want to say 2 or 3 years ago, when you were just starting the company, and you're firing on all cylinders now. What's the future look like for AQMD?
Yeah, we're going to continue to execute on our mission, which is to accelerate adoption of medical technology. I mentioned we're at about 150 medical device companies now, including 5 of the top 10. We've got a suite of product innovations that we're excited for, and as we head into 2024, that'll expand our reach beyond the med device rep into marketing, into national accounts, into sales leadership, into sales ops. So really focused on broadening our platform and some of the use cases we can support to a much wider audience at the med device, at the med device company. And looking forward to our second customer conference, the Flywheel event in Minneapolis, which will be in September of 2024 as well.
All right. Well, Mike Montevoucas, thanks for joining us on the podcast.
Of course, Tom. Thanks so much for having me.
All right. That concludes my conversation with Mike Montevoucas of AQMD. Thanks, AQMD, again for stepping up and supporting this new Ortho Innovation Talks podcast. If you'd like more information about AQMD, you can visit them at our DeviceTalks events. They're always there, and they're always great contributors, but you can go right now to acuitymd.com. So you've had a couple of busy years at ZB, a lot of changes. We'll talk about the ZimV Spinout in a moment. I know you were heavily involved in that. But how would you present Zimmer Biomet's overall growth strategy now? What is the objective over the next, give me a time frame, 4 to 5 years? Where is Zimmer Biomet headed?
Sure. So, our growth strategy is really all about that we want to increase the amount of revenue we generate in higher growth markets, because that's what makes it easier to sustainably increase our revenue growth. So if you have looked historically at Zimmer Biomet versus our peers, we have not been growing at our peers. We would be at the bottom end of our peer set previously from a growth perspective. So one of the first things we did when we came in to Zimmer Biomet and created our new corporate strategy, a big part of that is, how are we going to grow? So I usually talk about 3 components of our growth strategy, and they're all around how we're going to get more revenue in faster growth markets. So the first place we look is, how do you generate more revenue in faster growth submarkets inside of our largest business, which is large joints. So second is, I can go through each of them. The second one is we generate more revenue in higher growth markets and submarkets inside of what we call our SET reporting segment. Okay. And then the third is actually divesting non-core businesses. So if I go back to the one around large joints, I would start with the fact that we have the vast majority of our revenue today in knee and hips, right? It's very attractive markets, and markets themselves have grown historically, globally, somewhere around 3%. So we know we need to grow faster than that to, again, drive that above market growth, which we need to drive. So how do you do that? So we look for those faster growth knee and hip submarkets. So think things like cementless knees, robotic assisted surgery, those areas inside that grow faster than that overall market. So that's kind of step one. Then that step two, we actually have a pretty big category. Again, we refer to it publicly as SET, but it's basically we've got things like sports medicine, upper extremities, lower extremities. We have a CMFT business, which is craniomaxillofacial, as well as thoracic under 1 liter. I know I mentioned that when we were talking. So you've got all of these different categories, and those are all higher growth markets. So the idea is we need to invest more in those businesses, because the more revenue you have in higher growth areas, the more we can sustainably increase our revenue growth. So that's kind of number two. You would have seen examples in that with earlier this year, we announced the acquisition of Embody in our sports med business. So sports med already grows, let's call it mid-single digit. But then we looked at Embody, which is in the rotator cuff augmentation submarket, and that's growing double digit. So again, a lot of the resource allocation decisions we make are around investing in those higher growth attractive markets.
Well, in the hip and knee, we'll focus on the knee. I mean, you've had your knee implant with the Canary sensor. You moved into really heavy technology there. Is that an opportunity? Is the introduction of those technologies into things like hip and knee, which are stable markets, is that what really infuses growth in those areas when you bring in that new technology?
Yes. So that is another perfect example of a place where we said, okay, we need to, again, increase the overall revenue growth, and what are multiple opportunities to do that? We always like to think about how, so robotics was one I mentioned, but I would have put Persona IQ absolutely right in there. The whole concept of smart implants, that again is a market development, so it will take time, but our view has been that that's going to be a material growth driver. Interesting.
And on the SET side of things, does the future of Zimmer Biomet look differently? Does that become, and I don't think you gave me a sense of what was how much each part comprised of your business, but is SET going to be a larger part of your business going forward? Is that where a lot of the new investment is going to go, or yes, do you kind of see 50-50?
Yeah, well, I mean, again, when you start here, it's going to, over time, it takes time to really move portfolio mix shift quite a bit, but certainly, and we've already seen that more and more of our investments are going into those categories. For instance, I mentioned the recent Sportsman acquisition. We've done 2 acquisitions in that thoracic space that I mentioned as well, right? Thoracic is a mid-single digit growth market and has some really interesting submarkets that are growing well, like rib fixation and sternal closure. So again, we're really focused on, I think most of our near adjacencies will be in that, what I call set reporting category. And so sports med, lower extremities, thoracic, upper extremities, those are all areas that would be high on our list of priorities for investment.
We had talked earlier, and you referenced that earlier, that I was surprised that thoracic was a part of Zimmer Biomet. I guess I always thought of you as an ortho company. So where does a business like thoracic fit into Zimmer Biomet? And again, is this an area where you're going to be moving further outside of orthopedics, or is this sort of just I'll say it's an outlier. You can tell me I'm wrong in calling it that, but is this going to be a single example of a non-orthopedic entity like that? Because everything else you mentioned.
Sure. I think it's an example of where when you make investments in some of these areas, it starts to really impact your growth rate. So we have we don't disclose thoracic, outside, but I would say we've materially increased the size of that business, albeit small, but it makes a difference, right? So, and thoracic really, I like to think about markets where you can get into where you have synergies. Thoracic, the reason Zimmer Biomet got into that was in part because of the connections around metal and plastic implants. You're just fixing, chest wall restoration as opposed to some of the other things we do. So even though it's a different call point, there are some interesting synergies. It was before my time, but when they made the decision to go into it, but it's one that makes a ton of sense to me. And again, that's another, I just think I like highlighting it because I think it's a good example of our growth strategy in action, right? Identifying markets that are higher growth where we don't have as much revenue today, but with some investment and some focus, we can really grow them and have them more materially increase our overall growth rate.
Interesting. So let's talk about ZimV. This is an enterprise that spun out. These are businesses that it was decided that they could perform better out on their own. Talk about the process of looking inward, looking internally, identifying what stays and what is spun out and given the opportunity to grow on its own. What is that process like of internal evaluation?
Yeah, well, I'd start with a reminder that it's, it is part of our growth strategy. So it's all, to me, it's all connected.
Okay.
And I say that because so often people ask me, mostly internally, but sometimes externally as well, how can reducing our revenue actually help our growth strategy, right? It seems very counterintuitive to people. And so I get that question. And I usually explain you can grow through addition, right? Innovation, acquisition. That's the way most people think about it. But you can also do that through subtraction, right? And so you think through, when you think about subtraction, you want to look at exiting lower growth, non-core businesses, right? Because when you do that, by definition, your concentration of revenue in higher growth markets and businesses is increased, right? So, and I do think our spinoff of Spine and Dental was a good way. I mean, so you asked about our internal process. These are good businesses, but they're in lower growth markets and they're impacting our overall growth. And the reality is capital's finite, right? I mean, everyone has to kind of compete for capital. So when you have to make decisions to fund different businesses at different levels. And so some businesses, and I would put spine and dental into this category, they hadn't yet, but they could actually become less valuable because they're lower priorities in terms of resource allocation decisions. So over time, they are likely better off with another owner. And I can say inside of Zimmer Biomet, spine and dental really struggled to get, I think, the attention and resources that they needed to thrive. So to me, that's part of how you evaluate, are you the right owner? Are these businesses better under your watch or not under your watch? And here there's so many examples of when it came to making resource allocation decisions, they would be toward the bottom of that list. And so harder for them to execute on their growth strategies. With the spin, they now have their own dedicated senior leadership team, and they have control over their own destiny in terms of resource allocation.
And so you identified those properties as being those that will be part of the spin. Talk a bit about the process of spinning out, the execution. What goes into that? I'm sure no two spin-outs are the same, but what are some of the primary components of spinning out two sizable businesses from an even larger business?
Yeah, it's funny. I will be very transparent in saying that when we decided to do this, I was like, I've done divestitures. This will be fine. Of course I can do this. And I definitely underappreciated the aspect of a spin versus a divestiture, in that when you are spinning off a company, you are creating an entirely new public company, like an entity. So I say you're pitcher and catcher. Whereas in a divestiture, you are just the pitcher. Someone else is figuring out the design of how to catch it. So that was probably one of the biggest eye-opening parts of the spin for me, and probably, I think, ups the difficulty level in executing them. So we had to take spine and dental business that were not integrated, of course, inside of ZB, because they were separate businesses. So we had to bring those together and then add on corporate infrastructure. So you had to hire a CEO and a CFO and his leadership team, and then actually build out the corporate infrastructure that they would need to be an independent public company. So that was probably one of the biggest differences and the biggest learnings for me. And then in terms of how we ran it, so we announced, we obviously worked many months leading up to it, and then we announced it in February of 21, and we closed in March of 22. So it's a pretty big lift to completely not only integrate internally and disintegrate or divest into something else.
Interesting.
We had probably at some point over 500 people in the company working on it. I mean, it was a very, very large initiative. I had a dedicated separation management office, unlike my integration management office, and with different leaders all over the company really working on it. And, I think in terms of the process, the other thing I'd say, lesson learned, because some people do ask me that question, is prioritization. So I think one of the reasons it was so successful for us, and it was because we were all very much aligned that we needed that to be a top priority for team members, because it is a very heavy lift.
And once the process was done, what was the impact on Zimmer Biomet? Did it feel as if you now were sort of free to run, now that you were not only through that process, but you had the properties, the businesses that you wanted to commit your resources to? It must be kind of liberating.
Yeah, I think so. For us too, it was we've been talking about our need to transform our portfolio. Again, we're going back to that growth strategy. We were a below peer grower, right? So we definitely had a growth gap that we needed to fix. The nice thing about being able to do the spinoff, in addition to all of the things that you referenced, in part, it was our first major portfolio move too. And we were able to do that at a time when capital was really scarce. So we were in 2019 thinking about, okay, we're going to start doing deals, all these things. And then all of a sudden COVID hits. and that really changed a lot. But what that spinoff allowed us to do was really to continue the momentum of our portfolio transformation in a way that didn't require capital. So the timing of it worked out quite well as well.
All right. And final question. Looking ahead now, you've identified the businesses you're going to be investing in, the high growth areas. What does the next few years look like in terms of portfolio management and M&A? Do you see a lot more happening internally in terms of R&D, or do you see more acquisitions happening outside companies like Embody? Should we anticipate seeing more deals like that?
I'm going to say both, right? Okay. So when I go to transforming our portfolio, we have to do that, right? That is how we are going to achieve the goals we need to do as a company, for all the reasons I've already talked about. And active portfolio management is a big part of that. So we talked about the spin, but certainly if you listen to our most recent earnings call, we talk a lot about increased innovation. That's something we have been doing very consistently. We didn't talk about that a lot here, but very consistently over the last several years. And I know we mentioned in that earnings call, we're on track to launch over 40 new products over the next 36 months. And to me, again, when I think about resource allocation, 80% of that pipeline are in markets growing at least 4%. So same is true. So very, very focused on innovation. That will continue. So internal investment still remains extremely important to our organization, but so does M&A. And I think, we spend a lot of time looking at them through similar return metrics, through similar reasons to do things, but we need to do both. And I think now we are in a place where we can do both from a balance sheet perspective. I think we've been, again, more balance sheet constrained as we were paying down debt over the last several years and just getting our balance sheet into a good place post-COVID, but we are there now. So I think you will continue to see lots of innovation. You will continue to see, I think, continued smaller acquisitions like the Embody or the A&E Medical, some other deals. Strategic partnerships are another source of capital, like you mentioned, one we have with Canary. And also, we've got an ability now to do larger deals that make strategic and financial sense with the flexibility that we now have. So I think what you're going to see for us is more portfolio transformation.
Wow. All right. I like that little tease at the end. We'll see what happens there with larger deals. And I know I'm making something probably out of nothing, but it's a great way to end a podcast. Rachel Ellingson, thank you for joining us on the podcast.
Thank you so much for having me. It's been a lot of fun.
All right. Well, that wraps up our first episode of the Ortho Innovation Talks podcast. Thanks again to AQMD for supporting this episode of the Ortho Innovation Talks podcast. And thanks, of course, to our Ortho Innovation Talks podcast partners, Zimmer Biomet. It's going to be great fun telling their stories over the next couple of months. We'll have many of their senior leaders, including CEO Ivan Tornos. He'll be joining us in episode number 3. So eager to talk to Ivan Tornos again. We had him on the DeviceTalks weekly podcast a while back when he was COO, but have not had the opportunity to talk to him since he is taken the CEO role. So excited to learn more about the direction that he sees for Zimmer Biomet. And thanks again to AQMD for sharing its story. We'd love to have you share this story of the Ortho Innovation Talks podcast. Please do post it on social media. Tag Zimmer Biomet, tag myself, tag AQMD. Let us know that you're out there and posting. It would be great to hear what you're saying and to be part of those conversations. You can connect with me directly on LinkedIn. My name is Tom Salemi. I am editorial director at DeviceTalks. And of course, subscribe to the DeviceTalks podcast network so you don't miss a future episode of Ortho Innovation Talks. That's it, folks. Thanks for joining us on this debut episode. Can't wait to bring you more stories from one of MedTech's most exciting sectors. Take care, everybody.